when you get to the new reality in silver, and it could be, my guess is it's going to at least be 100. It's quite probable, possibly it could be 200. That's a new reality. No, that doesn't mean you're going to stay up there. You can have a sell-off, but you're not coming back to 50. Your sell-off might be from 200 to 125 or something. You're in a new reality on silver then. The key is participating in the move into that new reality. And I think it's not going to be one of these things where you get to casually judge it along the way, if you know what I mean. If you're
Right.
not there, you're not there. So anyway, that's what we're facing. And the miners, our expectation based on long-term spread analysis is that they could double to possibly triple in relative performance to gold. So as gold continues up, the miners will continue to beat it by large amounts.
Michael Oliver claims that silver's strength isn't arbitrary. Rather, it stems from a framework he refers to as momentum and spread analysis, which monitors how silver performs in relation to gold, stocks, and other benchmarks. When these spreads move in favor of silver, it usually signals the beginning of a strong and protracted upward trend. The indications that preceded silver's surge from $5 to almost $50. Behind this surge lies a combination of factors few markets can match: tight supply chains, surging industrial demand from green technologies and electronics, and renewed monetary demand as global debt and inflation continue to spiral. Together, they're creating the perfect setup for a sustained breakout, not a speculative spike, but a structural revaluation of silver's role in the global economy. Michael Oliver explains in his most recent research why silver's momentum indicators are indicating a significant shift and why the upswing may persist far longer than anyone anticipated. Be sure to like, subscribe, and hit the notification bell for more insights into gold, silver, and precious metals investing.
This is a fantastic time if you're a gold and silver player to be alive, isn't it? So let's start out talking about gold and silver and we'll work our way to the miners and anything else that we want to cover here. So yeah, talk to me about where are we at in the gold market and the silver market here? You pick.
Well, I know if you look at a price chart, a current price chart, arithmetic scale of gold or silver, you think, oh, wow, it's just gone ballistic. I got to take profits. Okay. The bigger context is totally different than what you see on that screen. The screen looks like, yeah, I've gone ballistic compared to the price action that prevailed over the last couple of years, which is more layered. In fact, there was a period just April, May, June, July, August where gold was dead sideways. Okay. But this chart's very informative. And I'm possessed by it, okay? As a technician. This shows silver price on a logarithmic or ratio scale chart. So, I've shown the period in 79 and 80 where silver, after going up for several years, went vertical, okay? And then there's the period in 2010, 11, the green arrow and the lines, where you've been going up for years, and then in the last 2 quarters, you went vertical, okay? We've been going up for years, just like those, okay? Not vertical, arm wrestling all the way, torturing people, monthly consolidation periods, corrections, all that stuff that goes with the normal arduous bull market. We argue that you're at the gate of going vertical. And forget momentum now. We'll get into that later, and the key trigger for this we'll get into in a second. Just looking at the price charts, a log scale. If you measure what happened in the last 6 months of that vertical move that peaked in 1980, that's the red up arrow with the 2 horizontals showing where it started and where it ended. 6 months, you went from like $8 to 50. Okay. So we mark that distance on the log scale chart there. Okay. Forget that. Now let's go to the 2010-11 period where you also went up to the $50 level. And in the last 6 months there, between the green horizontal upper line and the green horizontal lower line, you went up X amount there. Okay. We mark that with the green arrow. Now, when we take those 2 arrows, the green arrow showing the logarithmic dimension of that move, 2011, and the red arrow to the 1980 peak, and move them over to the present. At the present price, if you go vertical, and I'll give you that argument in a minute, equaling the 1980 surge, 79-80 surge, you go up to $200 or so, okay, logarithmically. And if you match the move from October 2010 to April 2011, where silver went from like 20 something to 50, silver's going over 100 to match that ratio scale over in the next handful of months. Okay. Now, what's going to cause this? Well, aside from the certain fundamental arguments and also the fact that Silver ain't going to stop at a triple top, guys. Okay. If you want to sell at 50, go be my guest. You'll be buried. Okay. The question then is, though, once we get through that silly nonsense level of 50, because frankly, it is nonsense because it's so many years ago that in real dollar terms, factoring in the degradation in the real buying power of the US dollar, remember it doubles and almost doubles in quantity every decade. So it's a junior version of the Weimar. Okay, silver would be $200 just to match the 1980 high or something. Some number like that. Okay, so silver's been suppressed. Gold's way above its 2011 high, way above its 1980 high. Copper's above its 2011 high, and yet silver's supposed to stay below it. $50. Oh yeah, right. Bet on that. Anyway, we're arguing that we're going to break out, and the key for the breakout now is not whether silver's in an uptrend or a downtrend, because it's already been going up for a couple years now, right? Okay, no question about it. Different manner of rise, but still rising constantly. What's going to cause it to go ballistic? Let me explain what the top chart is.
Yeah, please do.
That's simply every month, where is the price of silver? Divide an ounce of silver into an ounce of gold and express it as a percent. Okay. We go back to late 2019, and you see the surge into 2020 where silver beat gold on the upside. The black line went from like under 0.9% up to 1.5 something percent. So a big percent move. That's like silver went from 15 to 30 during that time, and gold went up about $600, but silver doubled. Okay. So the spread outperformed, silver outperformed gold. But since that high in actually early 2021, silver has been giving back relative value to gold. Okay. It actually dropped back under the 1% level early this year. In a sense, you can see shot up nicely now on the spread chart. Now, right now, the spread chart's above that downtrend, but we prefer that horizontal red line. This is the top chart again. Top chart
right here.
This is the spread itself, which is price versus price expressed as a percent. I want to break out over that red horizontal. That means getting the price of silver versus gold from where it is right now, which is 1.23% approximately, above 1.31%. Then that spread has a triple top breakout over a base that goes back about 2.5, 3 years.
Yep,
So it's
that's it.
technically important. Okay. Now, when we run momentum of the spread, which is the chart below, let's measure. What it measures is each of those monthly spread closes in relationship to a 10-month moving average. It has the same triple top, except you're at it.
We were right there.
Yeah, momentum is over to the right, is that third hit on the red line.
3.
So momentum is at its triple top breakout, which usually occurs first. Momentum almost always will break out into a new trend direction prior to price. Okay. We closed right at it the end of yesterday, the end of the month. Okay. Now, it doesn't take much to break that momentum through, and it doesn't take much to actually break the spread chart through. What does it matter?
Michael Oliver starts out by highlighting the strength of silver's present momentum, both in terms of price movement and its underlying behavior in relation to past trends. He clarifies that silver indicates more than a technical rise when it continuously trades above its major moving averages and holds those gains. It signifies a change in the mindset of the market. A self-reinforcing cycle of buying pressure is created when investors who have been cautious or waiting for confirmation are abruptly enticed back in. Oliver, however, goes one step farther. He places silver's surge in a world where real assets are becoming more valuable, and trust in conventional safe havens like US Treasuries is eroding. Understanding why silver's rise is more than just a passing trend requires an understanding of this change in capital flows. He draws attention to the increasing spread or divergence between silver and other benchmarks such as gold and stocks. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
That we all expected, especially you were predicting, and we expect it to do. Do you expect it, specifically silver, do you expect silver to ever come back down again, or is that it?
Yeah, well, it'll come down again, but it'll come down from a new reality. In other words, in both of those moves, if we further examine them, I don't have the charts here, but if you go back to that 79 to 80 surge at the tail end of that bull market that had been underway since 76 low. Okay, in the last 6 months of that move, there was actually a correction in the middle of that move, and
I
no
can bring
doubt,
it up again if you want me to.
if you can, you won't be able to see that on the log scale, I don't think.
Okay.
Well, yeah, you could see it in 2008. There's an example there. You'll notice about 3 months after the green circle, where silver surged from just above 20, it surged up to over 30. Okay. You had a bad month. No, the middle chart,
Middle chart right
the
here.
price chart. The middle one, silver, is the middle chart. That one there. 3 months later, you surged. Then you had a bad month in January of 2011, where you had a straight down month. 3 months after that spread breakout, you had a surge in price, but you had a bad month
Right
in
here.
January.
Yeah.
No doubt everybody thought, oh, that's it. It's a blow off and you're through. Then you turned, and the next 3 months, you went berserk. Okay.
Yeah, I bring
Same
up a good
thing
point.
happened in 79 to 80. There was a pause in the middle of the move, spanning about 5 to 6 weeks, where it looked like, oh, golly, it's topping. It was just taking a breath. And then it tacked on the rest. So it was the 3 months, wobble around, confuse, then get there. When you get to the new reality in silver, and it could be, my guess is it's going to at least be 100. It's quite probable, possibly could be 200. That's a new reality. No, that doesn't mean you're going to stay up there. You can have a sell-off, but you're not coming back to 50. Your sell-off might be from 200 to 125 or something. You're in a new reality on silver then. The key is participating in the move into that new reality. And I think it's not going to be one of these things where you get to casually judge it along the way, if you know what I mean. If you're
Right.
not there, you're not there. Okay.
Right. So in your opinion that's the move you want to get there for that move, and then you
Yeah,
can
after that,
reassess.
who cares? I mean, you've done
Right.
it. Especially if you're using anything with any potency of leverage, with futures or call options, especially. Uh, Again, the key is that spread, and that's our primary technical focus week by week in our reports. In fact, we're going to put out an update this afternoon on that, and I break it down into a weekly situation as opposed to monthly closes, because we're pressing at the levels that are key, and if you can get through them, it begins.
Kitty bar the door.
Yeah, and you don't need a headline. The reasons are built into the market. There's decades of underpricing of silver relative to gold, decades of underpricing silver relative to anything, the value of the dollar, not versus other currencies, but its real buying power, et cetera, et cetera. It made a mistake. Investors did. They let it get underpriced for too long and they thought, oh, that's the new reality. No,
Yeah.
it's just like, we see it with market tops sometimes. Like, you make a bubble top in a stock market and you think it's just going to go up forever. And it gets overpriced way too long. And when it corrects, it just doesn't correct. It collapses. It
Right.
doesn't need a new reason. It's the old reason that it's moving on.
Right. Talk to me about the miners here. What are you seeing in the miners? And you've been pounding the table just to give everybody some
Yeah.
context about the miners here since I've been really talking to you, which is it's been about 18 months. So go ahead.
Well, yeah, the miners were just like silver has, they've underperformed since 2020 relative to gold. They broke out on their spread basis about 4 or 5 months ago. And if you'll notice, when gold stopped in April with 3,500 high, May, June, July, August, dead sideways, GDX exploded.
Right.
The miners exploded. So when the spread broke out, it showed itself, especially even in the net price of the gold miners. They went vertical. You took even Newmont went from $50 level, it's up to 84 in a heartbeat. New all-time new highs. Okay, and people gave up on it. And in 5 months, excuse me, yeah, about April it started to turn. So a handful of months, it left the page and made a new high.
Right.
Did it need a reason? Yeah, the reason was it was underpriced in the first place. Okay.
Mhm.
So anyway, that's what we're facing. And the miners, our expectation based on long-term spread analysis is that they could double to possibly triple in relative performance to gold. So as gold continues up, the miners will continue to beat it by large amounts. And when you go back to the 1980s and look at relative performance of where gold, silver miners were in relation to an ounce of gold, like XAU index, for example,
Mhm.
you could triple its, we're right now pushing 8%. You could go up to 17.5%, more than double from where you are now, just to get to the underneath side of the multi-decade range it prevailed in the 1980s, 90s, and into 2000. So that's how cheap they are. And their relative performance, they could ventilate on the upside in terms of place to be. And after all, a lot of investors don't like putting their money in the bullion or futures or things like that. They like the miners.
Michael Oliver closes with a stirring statement regarding silver's future and the new reality, as he puts it. He clarifies that although there will be corrections in silver along the road, they will occur from far greater levels than those we have previously witnessed. In other words, silver will not return to $50 once it enters this new level, whether it is $100 or even $200. Future declines will simply be typical stops in a much longer upward trend. Oliver draws comparisons between this and previous silver bull markets, such as those in the end of the 70s and early 2010, when brief declines led some to believe the advance was over before prices skyrocketed even higher. According to him, the current state of silver is similar in that it's merely taking a breath before the next significant upswing. He cautions that once that action starts, it won't wait for investors to change their minds. He explains that the secret is to comprehend the fundamental structure of the market rather than waiting for a significant headline to support the rise. In comparison to gold and other assets, silver has been overlooked and underpriced for decades. However, these long-term imbalances are eventually corrected by markets and the change occurs quickly. He thinks that a significant reassessment of the actual value of silver is about to take place. Oliver also notes that after years of trailing, gold and silver miners are now beginning to show signs of strength. Some have already gained traction and may perform twice as well as gold, if not better. This implies that the entire precious metals industry is about to enter a potent new phase of momentum, one that is being driven by years of suppressed value suddenly being recognized rather than by hype. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.